Hi, my name is Josh Mahony, Chief Market Analyst at Scope Markets. Let's look ahead to some of the earnings for the week starting Monday, the 5th of February. Certainly coming off the back of a week that has been dominated by big tech and essentially markets that have been in a relatively unforgiving mood. The FOMC didn't necessarily do them any favors, but it does feel like with some of these sort of overvalued, or I say overvalued, highly valued tech stocks, we really need to see them hit the sweet spot of beating across revenues, earnings, and the outlook for them to strengthen. That may not necessarily be the case for the rest of the market because, of course, we have seen such a run up in terms of those tech stocks. And as we look forward into the rest of earnings season, there is obviously going to be some hope that we see a little bit more of a forgiving outlook from markets as we see equities trying to prove their worth as they move out of a period of elevated inflation in particular, which of course has implications in terms of margins and in terms of demand. In terms of the three stocks that I wanted to show you today, we're talking about Eli Lilly, we're talking about the likes of Alibaba and PepsiCo. So let's look into the numbers first and foremost. Eli Lilly, famed for more recently its push into the weight loss or the obesity drug sector. We did see their drugs essentially approved in the US by the FDA, and so they can go head to head against Novo Nordisk, which has become just the only second European company to reach a $500 billion valuation. So there's plenty of money in it. And now that we've seen it hitting the pharmacies out in the US, there is a hope that Eli Lilly's product will be able to provide a big boost in terms of revenues. In terms of how much we're going to see of it, well, that approval in the US came out in November. So arguably, we're not going to see a huge amount of it, but early signs of demand will be keenly followed. In terms of expectations this time around, we're looking for earnings per share of 231. You look back at the previous number, and we saw this big outperformance if you're looking at the surprise, 155%. But really, that comes down to the very low expectations. And so it's quite easy to get a huge multiple on a figure that's very low. Less so when you see a reasonable number, as we've seen in prior quarters. We're expecting to see 231, which is above all of the numbers we've seen in recent quarters. You have to look back to Q1 2022 to see a better number. So as you can see in terms of the forecast on the right, markets are expecting to see an upward trajectory in the coming months that just hasn't been there prior to this period. And then in terms of revenues, 895 expected. That's lower than the third quarter figure that we've seen. And so really you're seeing an expectation that they're managing to grow in terms of margins and profitability, whereas revenues expected to be more steadily increasing as we go forward. The second company we wanted to look at is PepsiCo. Again, margins and the ability to grow profitability is going to be really important. You can see that it's a relatively cyclical company because as we're expecting to see a drop off in the fourth quarter and in Q1, it's a similar kind of pattern to what we saw back in around about a year ago. And ultimately, the trend in terms of outperformance has been a very clear one, because if you look across the 8 quarters that we have marked out here in terms of earnings, every single one we saw PepsiCo beating in terms of their earnings, and a similar kind of story in terms of revenues. So if you're looking at the pattern over the past 2 years, you would say PepsiCo are quite likely to beat on both earnings and revenues. And the question mark is, what's the outlook as well if we do see that? But certainly, as we'll look at with the chart, the trend really is a bullish one, and this is the kind of company that hopefully can take advantage of that rise in inflation to be able to ramp up their margins and increase profitability. And finally, Alibaba, as you can see, generally beats on earnings, less so in terms of revenues. But really, this is a China story, and the volatility and downside essentially for Alibaba is more to do with the sentiment around the Chinese economy. We have recently seen significant purchases of the stock by Jack Ma, but as things stand, we're yet to see a significant pickup in terms of the share price itself. So could this be a good buying opportunity for Alibaba? So let's start off with Eli Lilly. Here we go. Let's get the chart up. In terms of sentiment, well, the weekly chart tells you all you need to know. Markets are feeling very bullish for this stock. The expectation that they could compete with Novo Nordisk on the obesity front and see a significant ramp up in revenues from that certainly has lifted sentiment. And the recent rally saw us push through 629 resistance, seeing a little bit of weakness as we're looking to close out the week. But I think there's a good chance that ultimately, as you can see here with the ascending trend line, any sort of period of consolidation, as we saw here at the back end of last year, likely resolves towards the upside if you're looking for a continuation of that trend. If we start breaking down through, trend line support, the likes of 61270, then it looks like we're going to see a wider pullback come into play. But until that happens, the near-term trend remains bullish. And certainly this is an opportunity for the company to really set its stall in terms of expectations for this new obesity drug that they've gained approval for in the US. And we should get some early insights in terms of demand. So I'm expecting to see significant volatility off the back of that. In terms of PepsiCo, again, you're talking about a company that has an incredible trend. This is the monthly chart. Now, we have seen this pullback within 2023. Does that provide a buying opportunity? Well, you can see we've come back down towards that 153, rebounded in October, and then had a relatively strong end to the year. Things a little bit more changeable since, but really you can see that it has essentially just been a story of consolidation of late. And so this could essentially just be a pause before we push on up once again and continue that long-term uptrend. In terms of how far off we are from that prior peak, you're looking at a circa 17% rise back up to the prior highs. So let's hope that this earnings report comes out in favor of the company and they can show that they're really taking advantage and increasing margins to the benefit of profitability. Certainly a trend that we have been seeing is people are willing to spend more, but they are buying less. They're receiving less in terms of volume. And so this is a company that is seeing exactly the same kind of pattern where you're seeing them ramping up prices in response to increased underlying costs, but increasing it to the extent where you can increase margins because of the fact that people are buying less because prices are higher. So let's see how this plays out. Certainly over the near term, you can see that the 164.86 level essentially sets the zone that we need to remain above if we are to expect this stock to push higher. The trend playing out over the course of the last sort of 6 to 7 months has been a bearish one. And so how we resolve from this current consolidation zone is going to be really key for us to determine where we go from here. But certainly I think there's a good chance that given this wider uptrend and the pullback in towards support, the rally, this consolidation, if we break up through that 170 mark, we could then push onwards and upwards for this stock. And then finally, Alibaba, like I said, sentiment really determined by the China story. And we've got all the way back down towards the lows seen back in 2016. Well, a lot has changed in that time. And I don't necessarily expect that the China story is going to remain weak forevermore. So this is arguably going to be as closely associated with any news in terms of stimulus and actions in terms of the PBOC and the Chinese government than the stock itself. So in terms of whether this is a good buying opportunity, well, look, we haven't seen a sign to tell us to buy quite yet. You can see that the recent rally has taken us up into that 76.4 Fibonacci retracement level, and we're starting to roll over. So the key level here is 77.79. A break up through that resistance level starts to tell a story of a potential turnaround for this stock following a protracted downtrend. But until we see that happen, certainly the trend is your friend, but it isn't friendly to shareholders of Alibaba at the moment. And the downtrend does still remain intact until we see that 77.79 broken for Alibaba.